Welcome to an episode of Dollars and Cents Discuss. Today we have with us Mr. Loo Cheng Chuan, founder of the very popular 1M65 movement, how you can be a millionaire by age 65 just by using CPF. So Loo, firstly, welcome to the show.
Thank you. Thank you. It's a great honor to be here in the midst of COVID-19. I hope everybody is safe and sound. We are going to reopen our economy soon.
Okay, so today we are going to be discussing another controversial topic. Unfortunately, it's not going to be on the CPF for those of you who likes Loo 1M65, but it's about the stock market. So Loo, recently you wrote an article published on Dollars and Cents, so that's our website, about why I always prefer the S&P 500 over the Straits Times Index. So just to be clear here, Loo, this is your personal view.
Yes, it is my personal view, and it's probably now shared more and more by people.
So we did ask this question in our Dollars and Cents Telegram group, and we had more than almost 1,000 people responding on this question. So the majority of people, thankfully, 58%, agreed with you that they will prefer the S&P 500 over the STI. So are you surprised by that result?
I'm actually quite surprised because if you push back maybe just 1 or 2 years ago, when this notion of STI being in some sense lackluster compared to S&P 500, this notion was still new. And when I first published my first article about a year plus ago on this topic, I was being ridiculed by many people. So, but now we actually see facts coming out, and people actually look at this quite differently. So I'm actually pleasantly surprised that the maturity of the Singapore investors has gone up.
And so your article specifically mentioned that you will choose the S&P 500 over the STI. So can I say that are you referring to the indexes, or are you in general referring to a fact that you will prefer US stocks over Singapore stocks?
So I'm a big believer of this concept called efficient market hypothesis, where it's very difficult to beat markets. So therefore, I choose not to invest in individual stocks. So by that, I would not have a chance to compare a US stock versus a Singapore stock.
Okay, good point. And given only one choice, Loo, I actually agree with you. The S&P 500 is obviously a more diversified index with a much larger number of big companies such as your Apple, Microsoft, Amazon, Facebook, Google. There are also 500 companies, as the index suggests. And I think that even the smallest company in the index, you are talking about market cap of about $2 billion, $3 billion. And that obviously, compares favorably with the Straits Times Index, where, you are mainly talking about 30 stocks. And to put it bluntly, mainly the banks and Singtel and Jardine, right? And those guys comprise of more than 50% of the companies. But here's the thing, right? An investor doesn't have to choose one over the other. They can choose both the S&P 500 and the STI. So what would you say to that?
What you're suggesting is what we call diversification. Now, in classical textbook answer to diversification is you normally pick two assets that are not correlated to each other or negatively correlated to each other for diversification. Having two assets they are correlated proportionally to each other is actually not diversification. So the STI and S&P 500 are unfortunately pretty correlated to each other in a direct way. And in fact, you will see recently when the COVID-19 market crash happened in March, when S&P 500 crashed, the Singapore market also crashed. Okay, so in that sense, having an investment in both indices actually does not provide you any diversification at all. So in short, there is no virtue in doing that. Now, if you invest in, let's say, S&P 500 versus bonds, right, or versus property versus gold or whatever, normally these assets move in different direction or not even correlated at all. I think that's okay. Okay, that's okay. But having money in both assets that are actually more or less moving in the same direction doesn't sound like a diversification wisdom.
Someone suggested that the S&P 500 is not exactly very diversified as well. So I believe the suggestion is come about, basically the person is saying that it's quite geared towards technology stocks. So, the Apple, Amazon, Google, Facebooks. What are your thoughts on that?
I think that's a good point. I think the top 5 technology companies or so, which is the companies I mentioned, takes up, I think, about 21% of the S&P 500. That's clearly a heavyweight. But I think when we talk about diversification, there are 2 types of diversification to talk about. Number one is diversification of industry. Now, even at 21%, it is still 1/5. It's not like those STI companies I mentioned, right? It's a 50%, just the top few companies. And that's a heavyweight. So there is still diversification across 500 companies. Right? And it's not so much whether is it enough a diversification, it's whether is it better a diversification towards STI. Clearly, if you compare just STI and S&P 500, there is no comparison in diversification. Right? It's very far apart. The second thing is the diversification of markets. So in Singapore, STI companies, generally, they play in the Asia-Pac field. And if you look at, let's say, Capital Land, right, heavily Asia, China, Singapore, whatsoever. But if you look at, US top companies in the S&P 500, McDonald's across the world. So if they're hit with one continent, another continent is still okay, right? So you look at Google, you look at Facebook, all these companies, they have their diversification, not just across, the index has companies like this that are diversified across different markets. And that's what we want in an investment that's well diversified. So in that sense, that kind of superiority is something that the STI cannot replicate.
Thank you once again for joining us. I think the viewers back home would definitely, they would have their own views. I'm sure they would have read your article and your views do make sense. And I think people back home, if you guys have a comment or you want to share your views, please feel free to comment on the video. So, Loo, thank you once again for joining us, and always been a pleasure having you on the show.
It's my pleasure. Thank you. Thanks for inviting.